Welcome to This Week in Real Estate with Jonathan Harmon and Bryan Nale, your local experts on all things real estate in Middle Tennessee. Listen in as they discuss the current state of the market, the latest trends, and have a little fun while doing it. We do want to say the opinions voiced on this podcast are for general information only and not intended to provide specific advice or recommendations for any individuals. All right, y'all, we're back. We're back from the hiatus. We're back from the trip. We're back from all the things. But this is where we put the ales in sales.
Ales in sales. That's right. Hey, he told me I had to move this, but
Cedar Glade.
Represent.
Yeah, the ales and the sales.
I like that.
2 weeks, man. I wonder what our listening audience did for the last 2 weeks when we weren't here on Tuesdays at 10:30-ish to bring them real estate news.
Probably the same thing they would have done otherwise.
No.
I can't even come up with something clever. Hey, but I ate puffin.
You did. You got it.
I did.
You got the
I
puffin.
did eat
Did you
puffin.
eat fermented shark?
I did.
That's
it was
fantastic.
awful.
Oh,
it was absolutely
that sounds
awful.
pretty-
The puffin was smoked. It was delicious.
Okay.
I also ate whale.
What kind?
Fin whale is
Okay.
what it's called.
Okay.
And I ate whale sashimi, so raw whale.
No.
Yep. And I ate.
That's mammal, man. That's not fish.
I don't care. And I ate whale steaks that were delicious.
So let me
And
ask
I ate
you-
horse.
I was gonna say horse is a big thing. So, but back to the whale. Okay, if you're eating whale, since it's mammal, would it be tartare instead of sushi?
They called it sashimi.
Sashimi? Okay, I was just curious.
Yeah.
If it
Well, that's a
would-
fair point. It probably would be tartare.
Interesting. Was it red?
It was in cubes, yeah.
Was it white?
It was red.
Okay.
It was delicious.
Interesting.
Yeah.
I want to see a whale. I want to go whale watching.
We saw whales.
I bet you did.
So the sun, we went to Iceland, for those of you that were getting caught up. The sun never set the whole time we were there. 9 days. It didn't set at all.
That's amazing.
So-
you had some sunset type of skies, right?
Yeah, but it
fully
never went away.
Yeah.
So we got back from whale watching at 11:30 at night, and sun was still up.
That's incredible.
Moon was coming up. They sat side by side.
So
it
does
was
that
weird.
mean the Earth is flat?
Yes. No. Definitely not. Definitely not. It was incredible, man.
You say things like that, all of a sudden our viewership will pick up because it'll trigger and like we should start thinking of all the buzzwords to say.
You're a flat earther?
the
Yes,
algorithm,
you're a no-vaxxer as well.
the
right?
algorithm's going to really go off the chains. Now
you
you
go.
said no vaxxer and
man.
flat earther in the
That's
same podcast.
That's
We're
it.
gonna be
That's it.
canceled
All we
so
need now
fast.
is moon landing wasn't real and some of the others, you know? Yep. Good stuff. Hey, and if you believe that stuff, whatever. I mean,
We'll still help you buy a house.
cheers. Yeah, your money's still green. Unless you're an independent nation or whatever those guys do,
Yeah,
you know? So anyway, bless their hearts. So, all right. So, man, hi.
Good to see you.
Yeah, we hosted Business After Hours last night here at Cedar Glade, and what a turnout!
It's a big crowd.
It was a big
A lot
crowd.
of good people in our community, and it's just fun to see everybody come together like that.
Just-
and just
Was it just me? And maybe this is my own wishful thinking, but it felt like people needed that.
The networking was strong last night. It was the connections were real, man.
They were.
It was an authentic experience, and I go to a lot of those things where I just try to seek out my friends and just not really be a wallfly, but for the most part, I'm just kind of there to
Yeah.
see my friends. But last night was awesome from a networking standpoint, meeting new people coming up to me and introducing me to people.
Yep, I had several of those as well.
It was good.
But it was very relaxed.
Yes.
Like it felt like people were genuinely happy to be there,
Yeah.
and it was just comfortable.
Yeah.
It was hot, but it was
Yeah.
comfortable.
Yeah.
I don't know. It felt like people needed that socializing and that connection point. It didn't feel as businessy, if that
Yeah.
makes sense.
Yeah.
More relationship.
And I wonder if the environment had something to do with that. Just being in a brewery tap room.
I mean, I like to think that it did.
It might have certainly seemed like it was a good atmosphere.
Yep, it was great. So, if you aren't familiar with business before or business after hours, check out the Rutherford County Chamber of Commerce website. And if you have a small business, if you have a special interest, if you have whatever it is that you're representing, an upstart business that you're trying to, your side hustle or whatever, come and shake some hands, meet some folks, seek me or Bryan out. We'll introduce you to some people, and it's good. It's good to make those connections.
I'm a big fan of our Chamber of Commerce just in general. From Paula Torb, Stephanie Reichman, Kelly Beam, Barbara, everybody over there, Polly. I could rattle off all the names for all the people that work there. But man, what a great team of professionals. And if anybody has any questions about what the Chamber does, or has any concerns about the Chamber of Commerce and like what they stand for, who they support, what their mission is, I'd love to help and have that conversation. Because I remember I had that conversation with somebody many years ago, and he's like, they just don't really do anything for the nonprofits. And I said, well, man, we got we got a ton of great nonprofits in our community, and they all do great things. But what the Chamber's here to support is the business community. And by doing that, there are going to be some opportunities to help some nonprofits along the way, but that's not really what their core focus is. Their core focus is to make sure that our business environment in Rutherford County is thriving. And by doing that and having a thriving business environment in Rutherford County, we're able to have a community who supports nonprofits in the way that we do.
That's exactly right.
The symbiosis is there, and it's a great thing.
Love it. All right, headlines. Trent wasn't ready. He wasn't ready for the jump.
He's doing what I asked him to.
That's what it was.
He's getting some B-roll for the socials.
All right.
All right, back to you.
So, big headline this week is Chairperson Powell speaking before Congress. He's doing his testifying up there. He does this twice a year, and on the surface, it's a lot of more of the same kind of talk. So that's why the market's been kind of flat. But I'm reading some subcontext in there and hearing more talk about how prolonged higher interest rates could start to have a negative impact on the economy. And man, you and I have been talking for a couple of years about how we have to go through some pain. And he's to that point now where he's starting to verbalize that. And I think that speaks volumes about where he wants to go with interest rates through the, going forward. We get not to get too far ahead of the market movers, but we get a big CPI report tomorrow. But you're starting to see politics coming into play too, the election year. And you're starting to see some Democrats lining up saying, hey, we really don't want to hurt the job gains that we've really worked so hard to gain. We've got people making good money. We got people working. We really don't want a higher rate, for longer than it needs to be, and cause that recession for people to start losing their jobs because these American workers, they're working hard
But at the same time, man, it has to happen.
Well, not if there's the soft landing. Right.
You still got to have some loss. You still got to have some pain.
So that's where we're going. That's where we're going, though. You're starting to see the political, so he's testifying before Congress. So there's going to be people up there that are going to be having some questions for him.
But if he drops rates too fast, then it doubles down and we go into a serious hyperinflation.
He's very adamant that we set our rates, we set our agenda by data, not by politics.
Yeah.
And so anybody who tells you that if such and such so and so wins, then this is going to happen. The Fed's going to do this. If so and so wins, no, the Fed's going to do what the Fed's going to do. Now it has to answer to Congress, and they have to go in there and testify about their decisions and why they're doing what they're doing. And they're going to always get asked some hard questions by whichever side is trying to maneuver through the political game. But what's interesting to me is that you're starting to hear him say those kinds of things now, that he thinks that now might be the time to start to pivot. It's been a year since the last rate increase, and that
it really?
Yeah, it's been a year. Wow. We're coming up on a year since the last rate increase, and so they've been stable now. Where they are for 11 months, almost 12. So
but inflation hasn't really backed down.
It's starting to. You're seeing that.
A little.
Yeah, a little. And but it's getting, I think the last report was like 2.6 and their target's 2. So, that it had gotten as high as 7. So they've really slowed it down. Now, what they don't want is deflation. It needs to kind of settle and come into that 2% annual growth. And when they get to that number and they feel like they can start to lower rates without it ramping back up, they're going to do it.
Do you think so? Just more of a hypothetical, I guess, question. Do you think that we really don't want deflation, or do you think that we want a little bit of deflation? And I'm not talking like just housing. I'm talking just in
groceries
general
and everything.
Yeah. Because the reality is, if inflation's been at 7% and it's been out of hand for a few years at this point.
Yeah.
Wouldn't we actually probably benefit just a little bit with just a little bit of deflation?
I think your average household would, but then there's there's going to be what kind of how far does it go, how long does it go, and what kind of ripple effects does it have? No, I think right now your average household would love a little bit of relief when it comes to that. But I tell you, what could really give a lot of households a lot of relief too would be lowering rates, because people with HELOCs, people with credit card balances, you could accomplish some relief in the household budgets just by cutting prime rate. And that's what the Fed does. They don't touch mortgage rates. Now, mortgage rates are going to kind of follow.
Yeah, there's reacted.
But when the Fed comes out and says, "Hey, we're going to lower interest rates a quarter," what's going to happen immediately is people with those revolving debts that are tied to prime, they're going to see immediate relief from that. Mortgage rates have probably already kind of baked all that in. So if the Fed comes out when they meet next time and they lower rates a quarter, I don't think you'll see mortgage rates make a big move, because it's already kind of being priced in at this point right now.
Yeah. Interesting. Okay. All right. I don't have a headline to contribute. That was a good one. Let's go to the Yes, It's Real, our favorite segment of the show. Oh my.
Did you take this picture in Iceland?
No. That is amazing.
Man, if those weren't mirrors over there on the closet doors, you could just imagine this room going and going and going.
I gotta be honest. I like this room.
It's kind of vibey.
Dude,
It's kind of vibey.
It's got that retro thing going.
That is so
I would
much
live
carpet.
in this room.
I love the curtain by the toilet.
Yeah.
That's classy.
Yeah.
Yeah, I dig it. I don't see the problem here.
Last time my wife and I were looking at houses, our realtor said, you know, someone loves you if they put a door on their toilet.
Yeah.
Yeah. Yeah, this is so the one vanity has the stool, but the other doesn't. So
Well, the stool is in between. That's a makeup thing.
yeah.
Yeah.
Okay, no, but there's a mirror over on the other side. I thought there was a vanity there, but you're right. There's no sink there. That's just another mirror. These people love their mirrors on the ceiling, the closet.
That's for some.
Hey, I have no problem with this. I like this room.
Jonathan signs off on
I'm
this.
in. Yeah.
This is real.
You don't
this
see
is approved.
Another thing you don't see. There's so much to break down here. We could spend a good bit on this. You don't see the platform bed with the steps going up to it a lot anymore.
It's pretty sweet, dude.
You don't really see that a lot.
How about the carpet going up to the hot tub? I mean,
Yeah.
that's
That jacuzzi tub.
I mean, there's room for improvement, but I mean, it's going to feel good on your feet.
you're not wrong.
I dig it. I'm in.
That carpet looks plush.
It does.
It does look really soft.
It does.
It really
I'm
feels
in
really
on this.
good on
This
your
is,
toes.
this is fantastic. This
Okay.
is straight out of Miami, circa
This is like Scarface.
1976 or so. Yeah.
That's
Popcorn ceiling.
that is real.
I love it. Love it. That's a good one.
Shouts to
I
Missy.
want this.
I don't
I-
even know where you find these.
I don't know.
Trent, send that to Lisi.
Oh,
Y'all are in the middle of a remodel.
That's right.
You can make it happen.
Send that to my wife and tell her that that's the new plan for this.
You can make it happen. Now is your
now
time.
is the time. That's so good.
She will get me checked into an institution. I'm just telling you. Oh, that's funny. That's good stuff. All right, market movers.
Back to you.
So I've got. Oh man, I just spilled my coffee. I hate when that happens. I've got a market mover, and this is just kind of general knowledge as far as real estate industry goes. We're about to come into what is typically every year the slowest month of the year, which is August. Schools always impact house sales.
Yeah.
People like to be settled before junior starts the school year. September will pick back up again. And it's hot. I mean, August is the hottest month of the year. So people just don't like to do much in August. But so I guess where I'm going with that is if you're considering it, if you're thinking about getting the house ready, that kind of thing, I am generally a guy that says, unless you need to get it going right now, I'm generally a guy that says hold till September. But I will tell you, in this particular climate that we're in now, I would actually not give that advice. So 3 years ago, I'd have been like, yeah, just hold off, wait a month, let's do it in September. Let me take that back. 5 years ago, I would have said that. 3 years ago, I wouldn't have.
It didn't matter.
That was all gas.
Yeah. Now, what I'm telling people is we've had a pretty big surge of inventory over the last 6 weeks.
Yeah.
But even so, if you've got a house that's worth selling right now, you need to go ahead and get it on the market. And even in August, even in that slowest month of the year, I would say go ahead because there's just not a ton of competition either.
Yeah.
Now you got to price it right, and you got to be ready to go. Got to be dynamic with that. But
are you still seeing new construction in that kind of approaching half of the inventory right now?
Yeah, it is. I need to pull the June numbers. I haven't done that yet. But we just pure anecdote, because again, I haven't pulled the numbers. It seems like the month of June, we got a ton of existing homes.
Okay.
That people did kind of, listen to everybody that was saying that.
Yeah.
And we, that inventory came back up.
Yeah.
But it's still not, it's probably still 50-50.
Yeah. I think my market mover is, and if you know me, if you've listened to me, if you've heard me talk about this, how far my eyes rolled back to my head when I heard people say marry the house and date the rate in 2022 and even 2023. I think what we're seeing now is people are starting to feel like a little bit more comfort in doing that, because and I'll say this for those who don't know my stance on it. I hated that phrase when rates were on their way from the 3s into the 4s and into the 5s, because I didn't know where they were going to go. Yeah. I didn't know how high they would go. So somebody who married the house and dated the rate and they got a house at 5%, they ain't refinancing. They're married to that rate. That marriage ended up being a long-term thing for the house and the rate.
Mm-hmm.
And when rates start to come down, they probably still won't be able to refinance.
Well, it has to drop to 4.25 or so before it starts to make sense.
It has to drop a good bit, and
it probably won't.
It probably won't. So I didn't like that phrase, that saying. That I thought it was kind of clickbaity. I thought it was kind of gimmicky. It was trying to make light of a situation that really wasn't light at all. These are big decisions, and so we shouldn't flippantly roll things out like that. And I felt like a lot of our industry was just kind of blasé, marry the house.
They're trying to get deals done,
trying to just stay in business. But now I think what's starting to happen, and I don't hear people saying it, which I love, but I think that people are starting to feel it, that they can say, you know what? We saw where they went. We think rates have probably hit their ceiling. They did that sometime around almost a year ago, about 8, 9, 10 months ago. We saw rates kind of hit that ceiling. They came down since then. They went back up a little bit, and they seem to just kind of be stair-stepping their slow way down. So people are having some comfort now in buying a house and saying, I can go ahead and buy it now at these prices. I can go ahead and buy it now while I can maybe get some seller concessions and then have a realistic shot at refinancing this house.
Well, and I think that's I think I'm speaking for you right now, but one of your biggest beefs with the marry the house, date the rate thing, and you said this to me, and I hadn't really thought about it this way, is that a lot of folks use that to justify, like, okay, if I can just be uncomfortable for a little bit of time, right, and I can stretch my monthly budget as far as I can stretch it, and then I can refinance and I can get some of my budget back.
Right.
Well, the reality of it is, if you did that at 5%, or you did that at 4.5%, 5%, 5.5%, even 6%, you're not going to get that relief. So the only monthly budget relief that you're getting is if you got a raise.
Yeah.
And so that's a very dangerous. If you use that to justify pushing your budget to the stretching point,
right?
Then that was not good advice.
Yeah. If you were comfortable with the payment, and then
it is what it is
about the house that you need to live in, because I think sometimes too we forget that this is home for our clients. This is where they're going to live. It's where their kids are going to come down the stairs in their prom dresses. It's like these are where memories get made. It's where Christmas mornings happen. This is
bury the dog in the backyard, and they're gonna.
It's home. It's life, and sometimes we just get too wrapped up in the numbers, and not to say the numbers don't matter, But sometimes you want to stretch yourself on the budget because you want to live your life in a home that you're comfortable in. And I think so. I've seen, and that cuts both ways. I think sometimes people are too afraid to stretch their payment when you're like, yeah, nah, you could really. I think you would be okay if you bumped your payment up an extra $200.
But if your lifestyle is to travel 7 or 8 times a year, then don't do it.
Everybody's different, and so, but you have to ask yourself. And this is something that I've told a lot of folks over the last 6 months. Really, so far this year, I've been really shouting this from the, a loudspeaker on the phone for a lot of conversations I'm having. Is if you are happy where you live, and you're gonna be for the next 10 years, then don't move. Stay put. Enjoy your current situation. But if you think in the next 5 years, 6 years, 10 years, you're going to want to be in a bigger house, go ahead and do it now. Mm-hmm. Or maybe if you want to downsize, go ahead and do it now. Because everything just lines up to now is going to be a good time to do it. Go ahead and get to where you want to be so you can enjoy it for a longer period of time.
Yep. I agree with that. Okay, good stuff. Shiny penny.
There you go. Back to you.
Man, I jotted a bunch of notes down on this stuff, so I actually ended up kind of moving some things around. But the shiny penny you suggested, just got back from Iceland, and housing is very different there than it is here. And I'm kind of a weirdo about this stuff, but I noticed. Think about this. So the northern coast. So Iceland's about the size of Kentucky. Okay. And the northern coast of Iceland is roughly 100 miles from the Arctic Circle. Okay. So there's your geography lesson for the day, right? So obviously extremely different climate than what we have down here. Yeah. But it is summertime up there right now. Yeah. And it's a very damp place. So their construction methods, and there's earthquakes caused by volcanoes. Yeah. So it's just a very different place. A traditional, like what we would call stick-built, frame-built house, they exist there. But all of their new construction stuff is concrete walls and then multiple layers inside and outside of different types of insulation. And so I noticed in one, the walls on this new place were about this thick. So they were well over a foot thick. Wow. And it was different layers and air gaps and things like that to insulate it. A lot of earth-bermed houses. So a lot of houses that have the dirt up and over and green roofs and things like that. Yeah. So they do a metal roof and then dirt on top and plant grass on it. That happens a lot. But also, it's the simple things, okay? All of their doors are different from ours. So picture what we would consider a regular exterior door, right? You got a steel slab, and you got a frame, and the door hits the frame, and there's a little rubber gasket there, and that's about it. Yeah. Okay. All of their doors have like it fits into the frame, and then it has a lip, and then it comes out, and it's like this, so that it doesn't just fit into the frame; it overlaps the frame
to block out wind. Mm-hmm. In cold
and
air.
Then you've got a rubber gasket here and here.
Oh, wow.
And so that was pretty neat. And they all opened outward instead of inward. Okay. Which I noticed was just a different thing as well. So
that's interesting.
Yeah.
I wonder why our doors open inward. Is it because it's welcoming, like you're welcoming people into your home, so you say, hey, come on in?
Theirs is pure functionality.
Yeah, it makes sense. Is there functionality to ours opening inward? I can't think of it.
I don't know. Well, because you don't have to step back. Yeah. So if it's raining or whatever.
You just come plowing through.
Yeah. But when we were there, 2 of the days that we were there, there was when I say sustained, I mean like a fan was turned on. Yeah. It never stopped blowing at all. Yeah. A sustained wind of about 30 miles an hour.
Wow.
The whole, literally all day.
Wow.
It was pretty crazy. So
that's crazy.
Yeah. So in that scenario, you don't want a door that blows in.
No.
Or that opens in.
Yeah. So I'm always perplexed and interested in home ownership in other countries. Like what, and this may be something that you're just like, hey man, I'm on vacation. I'm eating shark.
Oh no, we asked.
And horse. What is home ownership like in Iceland?
So it's about 50-50.
Okay.
So about 50% own, 50% rent. They have a very large immigrant population, and virtually none of them own homes.
Okay.
So a lot of the home ownership is rural areas and a lot of big farms. So Iceland's not very densely populated. So you picture the state of Kentucky with less than 500,000 people that live there.
Wow. I wonder what the population of Kentucky is.
Louisville's more than 500,000.
Yeah.
You know what I mean?
Yeah.
Rutherford County is almost 500,000.
Yeah. Yeah.
So
no, I bet it is.
It's getting close. Yeah. I think we're at like 445 or something like that.
Okay.
But yeah, I mean, we're getting close. And I think they're like 480 for the whole country.
Wow.
And 60% of them live in Reykjavik.
Yeah.
In one city.
One city. Yeah.
Mm-hmm. Or in the, the area around
it.
So a lot of, second, third, fourth, fifth generation type parcels of land, that kind of thing. And then other than that, man, a lot of true condo type apartments where they're, you've got a box and it's stacked next to this one or on top of another one or
so from a lending standpoint, a lot of the homeowners are generational homeowners. So there's no mortgage to be carried.
Correct.
It's just that this property is transferred from generation to generation.
I'm going to guess that their mortgage industry is very small.
I would imagine so.
Very, very small.
That always fascinates me, and especially when you look at these older societies and older countries, you see so much more of that generational type of thing. And you think back to just the feudal days, all the way back then. Like there was your property owners, and then everybody else was a serf, right? So, and as properties were sold and as estates were sold, you had more opportunity for people to become homeowners. But Europe's a small country, man. And there's only so much land and so many houses there. So that stuff fascinates me.
Well, and a lot of the land in Iceland is government controlled because they're doing a lot of preservation work. Yeah. So essentially the entire center of the, basically it's just the ring around it. That's really,
well, the center's where like the volcano and stuff.
The glaciers.
The glaciers. Okay.
Mm-hmm. Yeah. A lot of the volcanic activity is in the southwestern corner.
I really want to go to Iceland. I think it'd be a blast.
I'm telling y'all, everybody, you don't go because don't ruin it. But but you should go if you can. Yeah. It's awesome.
That's awesome. Pro tip.
You got one?
Shiny penny stuff that you wanted to get to.
Back to you.
So my pro tip, this is going to be fun because we both have a pro tip today. So my pro tip is to have a credit score, and there's people who would say you don't need a credit score to buy a house, and you don't. There's manual underwrites, there's non-traditional trade lines. You're going to get better terms if you have a credit score, and I know that we can pick this apart, and I'm game for that. But when I say that, is it true that it's better to have no credit score than a bad credit score? Absolutely. It's definitely 100% better to have no credit score than to have a bad credit score because we can fix no credit score.
So let's qualify that real quick. What's a bad credit score? Below.
Well, I can give you some limits. How about that? So, like a conventional loan, if you're going to need to have at least a 620 for a conventional loan. FHA is going to go to 580. A lot of lenders.
And what's the lowest?
550.
No, what's the lowest credit score?
Oh, the lowest credit score is 450.
Okay.
So I don't see a whole lot of credit scores in the 400s, and I don't see a whole lot in the low fives. But if you, so I said that about 550 for FHA. A lot of lenders will cap it at 620, and only a few will let you go down to 580, which is going to be really where you want to be. Now. Where you want to be is going to be up in the 700s to be able to do a conventional loan without having to pay through the nose for PMI if you're not putting 20% down. But anecdotally, the reason I say this is because you can do everything right. And most of the folks who intentionally do not have a credit score just because they don't carry debt, they don't carry a credit card, they don't carry installment loans, it would not be a problem for them to have some kind of active trade line on their credit report that they're responsibly paying.
Don't cell phones report?
No. Now you can have some utilities report. You can. There's some things like that where you can start to get some of those non-traditional things to report to your trade lines. That's always a good thing to do. Some landlords can report, not your local landlords, but like some of the bigger apartment complexes.
Oh, I can report.
Can go through that.
It just is a hassle.
How does that work? Tell me, because I've had that come up before. As just a private landlord, how do you report?
You get an account on one of the
Okay.
what do you call it? The bureaus or whatever.
Yeah.
Yeah.
And it's costly too, right?
I don't know. I haven't looked. I just knew it was a lot more registration than I wanted to do.
Yeah, it's not very common to see small individual landlords reporting to the bureaus. And I guess it can be done, but I think for some reasons, this was several years ago, so I don't.
What's
recall.
more of a tool that you use to try to get people to pay?
Yeah.
Look, I'm going to report your.
Well, or to attract good tenants too. Like I say, hey, you become a homeowner one day, you can rent from me, and I'll report your payments to the bureau, and that's a good thing for you. But no, you're going to this client that I'm working with. He wants to buy a home, and we're trying to figure out ways to make it happen. We're going to be able to make it happen, but it's just going to cost him a lot more money than it would if he had carried a credit card. Just having an open trade line.
All a credit score does is it indicates past performance, right?
It indicates,
and it gives
it indicates willingness to repay.
Right.
So I think of mortgage as a three-legged stool, and to be able to get the stool to balance, you need all the legs to be about the same. Everything needs to be in balance for you to be able to sit on that stool. Now, some things are a little bit off. You can slide a piece of cardboard under and get some down payment assistance from THCA, or maybe do a rural development, 100% financing. So there's some things you can do, but if those three stools are going to be your skin in the game. So how much money have you put into it? If you've put a lot of money into it, you're less likely to walk away from the property. So that's your down payment. Your next one is going to be your ability to repay. And that's how much money do you make? How much debt do you carry? What's your debt to income ratio? That's your ability to repay.
Mm-hmm.
And since 2008, that has been really, really protected by the CFPB, and we're seeing more broker products come in that offer different sorts of alternative income verification. But you're always going to have some kind of proof that you're able to repay a mortgage.
Mm-hmm.
And then the third one is the willingness to repay, and that's your past performance. That's your credit report. How have you shown this that you are going to make the payment? And
it's almost your willingness to not repay, if you really think about it, because your credit score really reflects. I mean, it does reflect your willingness to pay, but it also really reflects: am I willing to let something go to collections? Am I willing to let something get behind? Am I willing to not pay this?
Or am I just a forgetful person and I forget to make a payment one month? And so whether you call it willingness to pay or willingness to repay, whatever it is, it's responsibility with obligations.
That's right. All right. My pro tip is that you should never hire a real estate agent that is afraid of conflict.
Oh man, that's why I'm not a realtor.
And
I don't like conflict. That's why I chose the lending lane.
Man, so there have been a couple of occasions in the last couple weeks, even while I was on vacation, where I had to roll up my sleeves and get a little. I like being a nice guy. I like getting along with everybody. I like slapping each other on the back and high fiving and all of that stuff.
Right.
But sometimes it's got to instead be a fist punching somebody in the eye. I mean, it just does, and I don't want to do that, but if I have to, I have to.
It comes to it.
That's it. Yeah. And so we've had a couple of different little circumstances where we've had to take the gloves off and get in the trench a little bit. But the other piece of that, it's not. There are some people that just love to fight,
right? And they're going to seek out those conflicts. That's not what you want either.
No, that's not what you want either. So it's a balance of. Is what that other side is doing or proposing or wanting to do or whatever, is it right?
Yeah.
Right? Is it right for my client, right? Does it help my client on the other side of the transaction? And then the last piece is you got to know the tools as well.
Yeah.
And that is, does it fit the contract? And so two of the four items that I specifically was thinking about, it wasn't in the contract.
Yeah.
And so when that other agent was telling me what they were telling me, it was a really simple fight.
Yeah.
But I had to know the tool and I had to be willing to say, no, you're wrong about this.
Yeah.
And a lot of folks aren't willing to say, to call someone out.
Yeah.
Hey, no, you're just plain wrong about this. There was one guy, I literally said, what you just did is illegal, number one. And number two, it is a big, big deal. So had somebody that gave the key code to a client to go into a house unescorted. And I'm like, dude, can't do that. Cannot do that. And I jumped his rear end.
So I think of the best boxers, and I'm not a big boxing fan, but I know this. The best boxers are the ones who can land a punch and throw a hard punch, but they're also tactical. And if you can combine that kind of, if you're going to use a fighting analogy here, in real estate agents, if you can find a realtor who is smart enough to know when to throw a punch, smart enough to know which way to throw it,
when to feint,
when to, but then when it's time to throw, can land the punch in the right spot.
Yep.
That's what you want.
I tend to think of Mr. Kenny Rogers in The Gambler. You know, you got to know when to hold him and know when to fold him.
That's probably a better analogy than all this aggression and fighting. And
That's awesome.
so,
hey,
anyway.
how about we've got a couple of people from the community up in at the World Series of Poker this week.
Do we really?
Yeah, Richard Pearl from Keller Williams. I know he was up there. He's out now, but he had a good time going out there and playing it. And an old college friend of mine, I guess he's not in the community anymore, but an old college fraternity brother of mine was up there. He also busted out.
Well, I haven't looked at it in the last couple days, but we also had some of the Murfreesboro Little League teams were participating in the Little League World Series.
Oh wow! Awesome.
I don't think they made it to the finals. The 11U might still be in the tournament, aren't they?
I'm not sure.
I think 11U might still be in. 12U went out to they got beat by Hendersonville or Gallatin or one of them.
Those guys can play up there,
right?
Yeah.
But I think 11U might still be in.
That'd be awesome.
Yeah.
Very cool.
So
Kudos
to
That's another shiny penny right there.
It is,
shiny penny.
Bonus.
All right, closing remarks. You got anything?
It's good to be back. Spread the positive, man. Find light on what's going right and shine it, man.
Bring light to what's going right. That's right. That's what we do.
I always
Shouts to the
butcher that
1200
tagline.
Club. We're growing. Got some really cool new things that we're pushing. So, also wanted to plug the Automate Everything event coming up with the Tech Council. July 30th, we had a lady named Shauna Sprague. Her episode just went live today, but it was amazing. Like, this lady has been in automation for 15 plus years, and she's with Amazon now and starting her own company called FemLogic AI. And the stuff that she can do blew my mind. Like, I'm talking taking your kids' like schedule or your syllabus or anything. Like, basically, like, it's a soccer mom's dream, and anybody, honestly. But just like scheduling.
Doesn't that freak you guys out just a little?
Not really.
I mean, come on, man.
I mean, the way she framed it, it's literally just freeing up your life to focus on what.
For now, until
man.
they take over. I mean, look, I'm not that guy, okay? I'm not. But I've seen Terminator.
No, I mean,
You know,
this is like
I've seen iRobot.
Hey.
I've seen all these movies, and I'm like, there's just a little piece of me.
I get it.
So the Nashville Mortgage Bankers Association is having a little seminar tomorrow morning, and I'm gonna go to it. It's about AI, and I want to learn a little bit more. I want to have a little bit more power, a little bit more knowledge about it. I don't know why I said power, because I feel like when I come back, I might be half robot. I don't know, but I'm excited to learn a little bit more about AI and how it's gonna impact all of us, man.
This event's gonna be awesome.
Yeah.
But
I know.
you got eyeglasses that have computers in them.
Oh, yeah.
You got all this stuff, all
there's
these
a lot
little
of sketchy
wearables.
stuff.
And the next step is, did you ever see the show The Feed, where they plant it in your brain and it can beam news into your like?
Yeah,
Don't
like that one.
just like it's just.
Don't go start watching Black Mirror, Jonathan. You don't need to do that.
I know. I have watched some of it. I know.
It's terrifying. It
I
really
know.
is.
I know. I mean, I don't know.
That's her whole thing, is using it for good. But
For now,
yeah,
Yeah, so I'll give a shout
it's
out.
one switch, dude.
Yeah.
That's all I'm saying.
true.
It's terrifying. I'm with you, Jonathan. 100%. It's terrifying. That's why I want to go. It's kind of like know your enemy kind of situation.
Yeah,
100%.
That's why I'm going.
And I'm not saying like, oh, we need to go back, stone tablets or whatever. I mean, that's not what I'm saying.
Yeah.
I'm just saying there should be just a little ounce of caution
oh yeah.
in this,
Well, I think there's a lot of tech leaders who are really kind of standing up right now. I mean, like, this needs to be bridled because we cannot unleash all of the capabilities that are out there right now. If they were all unleashed, everything we know would change.
We're pointless.
Everything we know would change.
Yeah.
So before we digress into, I think our viewership is probably going to skyrocket from this conversation that we had all the way back to the beginning.
I need to put the transcript out there. We'll be,
If we can do auto caption so that this gets picked up,
absolutely.
Great. I want to give a shout out. We always give chance for Trent to shout out, spread the positive what he's doing. But I've got a little series that we came in last week and we shot some short little quips. So be looking on my business Facebook page for those to start hitting as soon as he gets through editing them and putting them together. And if there's anything that you have questions about in the mortgage or the real estate world, let me know. Drop me a message, and I'll be happy to cover those because I'm going to be filming content on a pretty regular basis that I can just kind of throw up in some different reels and stories and things.
We should do that. We should take This Week in Real Estate and do some shorts.
Absolutely.
Yeah, I think it's a good idea. Cool, man. Love it.
Thank you, Trent.
Yes, sir.
Thank you guys for watching. Have a good rest of the week. If you have any real estate questions, give me a shout. If you have mortgage questions, give this guy a shout. If you just need a beer this weekend, come down to Cedar Glade.
That's right.
Yeah.
Be outie.
It's going to be a good weekend.
Thank you for listening to another episode of This Week in Real Estate with Jonathan Harmon and Bryan Nale, your go-to resource for all things real estate in Middle Tennessee. Be sure to like, share, follow, subscribe, and leave us a 5-star review. We will see y'all on the next one.
Now for the nitty-gritty. Primis Mortgage Company is a subsidiary of Primis Bank, a member FDIC. Primis Mortgage NMLS number 1894879, BK number 1042893, ML number 1894879. As always, all loans are subject to credit approval and product guidelines. Equal housing lender.